the speakers. Actually, we'd like to the speakers to see how the investment and insurance are related to the calculations of Faraid. So by the end of the session, we would like to show you how these two things are actually impacted to our wealth management. Yeah, and of course, for that, we would like to welcome everybody to take note and also raise questions, and hoping that it will be beneficial for everyone and enjoy the discussion. So I think that's all from me to fail. And I would like to thank the organizers today. We have Dimas, Fakhru, and of course the board members who are very active in making sure the webinar programs of IFPA running. Mbak Mahaning, Teh Rida, and Dr. Nur Bayina, and also we have the moderator today, to the speakers, Dr. Lukian, IPK, Dr. Prakoso, and also Dr. Sahizan. And everybody, of course, thank you again and enjoy the discussion. Wallahu a'lam bishawab wa alaikum. Very good morning to everyone again. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Dr. Mulani Mukhlisin, for the welcoming speech and introduction of Islamic Financial Planner Association. Okay, ladies and gentlemen, next let's hear from our esteemed speaker, Dr. Lukian Tamani, MEC CFP, as a head of BSI Institute and founder of Islamic Financial Planner Association, with extensive experience in Islamic finance. He will share valuable insight on Islamic investment. Please join me in welcoming Dr. Lukian Tamani.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Very good morning. Thank you to Phil for moderating and kindly introducing all the speakers and the sessions for this morning's webinar, inshallah. So I will share some of the thoughts related to investment. There will be, of course, overview of markets at the current situations, and then I will also introduce us to the I think preferences of our investors, and also at the last part I will share some of my thoughts on investing. So I hope these three parts will be useful to all the participants. I believe many are financial planners, financial advisors, and members of IFPA. So hopefully this will be as useful to the members as well as all the audience. Allow me to share some of the my brief presentations. Tufel, how many minutes do I have?
50.
Okay. Okay, great. I think we can just go I'll do some overview and then go into the substance of my presentation. So I would like to highlight the current situations. Actually, uncertainty and vulnerability is almost over if you look at the markets. Last week, for instance, we have seen some improvement in the monetary front, and hopefully also some of the other macro indicators will be much improved in the coming weeks as well as in the coming month. So this is my outline. I will kind of share the macroeconomics overview, and secondly, we will look at investors' behavior, especially based on the survey that we did. This is particularly Indonesian investors, and finally, we will look at how investing is still feasible, still doable, still profitable during times of uncertainty. First, let's look at the global and domestic events, especially this year and the coming years. The main themes for global outlook this year, I think uncertainty, yes, uncertainty is still the theme, especially with the escalating tensions in the Middle East, as Israel is attacking Lebanon as we speak. So potentially there'll be some repercussions and ramifications of those atrocities. So in addition to Gaza, which will be a year next month, now as Israel is expanding its aggression. So of course this will escalate the tensions, the temperature, the geopolitical temperature will increase significantly. So we need to be watchful. For Indonesia, of course, this year is a transition from previous or current presidency to the president-elect. So we will see transitions and perhaps also continuation of policies. In terms of macroeconomics policies, fiscal and monetary, we believe that there will be a continuation. So we look at hopefully fiscal discipline as well as forward-looking and also the more conservative monetary policy. Now, going forwards for Indonesia, of course, we'll have long-term strategy in place already. Indonesia's long-term planning as well as medium terms that will be implemented, including our transitions from Jakarta to Nusantara as our new capital. So of course, it will be mobilizing resources, people, as well as more investment. Again, so investment in infrastructure will be something that we will continue this coming period of presidency. At the global level, hopefully we'll see tension will de-escalate. Hopefully it will be gone by next year. But of course, that's our wish. In terms of policies, when the Fed cut rates last week with quite significant cuts, 50 basis point, that will continue. Some says in the coming 3 years or 2, they will pivot the interest rate at perhaps 3%. There is some estimates from economists. So we'll see interest rate as a cost of capital will reduce much further, and inflation will be much controlled. In terms of Indonesia, we look at these projections. So economic growth, as we projected this year, will be 5.05. Then will increase further next year to 5.15, as well as hopefully by 2026 will be 5.5 or 5.4. Of course, this set is variable with a lot of things, with a lot of assumptions in place. Inflation will be much controlled at 2.6, less than 3%. And interestingly, of course, for us, exchange rates of US dollars still relevant for us, is still important, still affect us. And we project actually exchange rate of US dollars will be, rupiah will somewhat depreciate towards the end of 25 and 26, basically. So we'll see rupiah will be somewhat under pressure. Why? Because I think we will import a lot we'll still rely on imports for our raw materials as well as finished products. This will of course put pressure on rupiah. And then BI rates, of course, will much reduce towards the end of 25 and 26. Another point that I would like to highlight is the growth in Indonesia will not be, will still concentrate in Java Island. So this will, of course, influence and affects our investments. If you are looking at investing in real sectors across the country, unfortunately, we will still rely on a lot of opportunities in Java Island, which hopefully we'll be able to spread out later along the way, inshallah. Now, another issue that I would like to highlight is uncertainty. The questions of uncertainty. Yes, uncertainty is still looming, still shadowing us. But if you look at the last dots here, the Q1 of 2024 is the uncertainty index is very low. It's basically lower than previous month. So we can conclude that actually the uncertainty is almost behind us. So this is more on economic uncertainty as well as political uncertainty across regions. If you look at the index, also much lower. So we can see that the the sentiments of a lot of analysts as well as economists and policymakers is more a bit more optimistic in terms of uncertainty. This is important because if we are as a financial advisors, if we want to advise our clients, we need to be aware of this indices. We need to be aware of macroeconomic indicators and development. We need to be aware of all the indicators affecting the welfare, the financial conditions of our clients. So I think being aware of uncertainty situations and analysis is important. So based on this data, we can say that the uncertainty situation is somewhat still affecting us, but still under control. And then risk factors. These are again perceptions surveys. In the coming 2 years or within these 2 years, the main concern of people is, of course, they are more on technology as well as geopolitics, environment, economics, and social. In terms of economics, the main concern is inflation and economic downturn or recessions. But of course, these two issues we have managed to control. So economic issues for the 2 years periods is actually quite manageable. But for long-term concerns of a lot of people being surveyed, has moved away from economics to environment. So this is of course, we are aware of environmental issues that will affect our business, our finances, our investments, as well as our needs for protections. If I may jump, for instance, environmental crisis will increase costs in business, as well as will increase the needs for instance, like home insurance, for instance, especially those located in the affected region. So again, the environmental issues are important for a lot of people. And of course, this is in line with what the Quran has warned us, that Allah will test us with khawf and ju'. Khawf is fear and ju' is hunger. So these are either khawf, fear of environmental climate crisis, or social unrest, for instance, or geopolitical tensions, and as well as economic fear. So this is something that we need to be aware. And the only way, I think, to seek refuge, to be protected from this fear and hunger, is to be patient, and of course to find solutions, as Allah mentioned, that those wabashirul sabirin. So Allah, of course, will praise and elevate those who are patient. But this is our nature, to be fearful as well as to be hungry. Yeah. So this is again the global issues. Now I'll move on to the second parts of my presentation. The second part is more on the spending and preferences of investors in Indonesia. Why I like to highlight the spending? Because the main issue in Indonesia compared to Malaysia, for instance, Malaysian households save more than 40%, or their saving rate is high, very high, because mainly their disposable income is high. Disposable incomes are the income that can be used for spending, basically. But for us, if you look at the spending patterns as well as households' finances, of course, spending has risen, either rural or urban. Overall, we have seen increase in spending of many of Indonesians from 2019 to 2023. It has continuously and constantly increasing. But if you look at the posture as well as the allocations of expenses by households, we see that the allocation for food is still high in many areas. As I will describe, I will see later across regions, for instance. So if you look at the breakdown of food expenses, of course, food is the highest, and then you have, interestingly or unfortunately, Indonesia, tobacco expenses constitutes of 15% in rural areas, while urban people, city people, only spend about 12 or 13% 11% of the incomes to cigarettes. Imagine if this 15% can be allocated to other use like investing, for instance. So again, we see how our household, how Indonesian households are allocating their money, their limited disposable income. Now let's start to look. I think this is more interesting to look at distributions or proportions of food and non-food expenses across provinces. Now you will notice that provinces that are more well off, richer, their non-food consumptions is higher, meaning they can spend on clothing, on transportations more. They are able to spend even on not spend on save or invest more because they have more funds left other than foods. Of course, their housing will be higher, but essentially, if you look at this graph, these tables, these two tables here or one table, you see that Jakarta enjoys much more higher non-food expenses allocation for the household, and then at the bottom you see Papua and Aceh, they spend more on like 57% on food. This can indicate two things basically. One, the cost of food in these provinces can potentially be higher because these are the more remotest provinces in Indonesia, one to the east, one to the west, because most of the production of foods, processed foods, are made in Java Island. We saw just now the growth concentrated in Java. So the distribution of food items are actually from this center towards the other islands, towards other regions. And of course, they will incur higher costs. So that's one explanation. Higher cost foods. Secondly, their income. If you look at their minimum wage is lower, and of course, with the lower income, then they spend perhaps the same amount of people in Java in terms of food. For instance, if they have 5 million in salary, they spend 2.5 in Java, also 2.5. But basically perhaps the same amount of rupiah, but in terms of because salary discrepancy, the percentage is higher. But again, regardless of these two explanations, we can see that basically the main conclusion is the more well-off a family or province is, the less they spend on food. Yeah. Now let's have a look at how higher income or middle upper people spend, allocate their fund. This is based on a survey. Now the food is allocated by about a quarter, and then they have food, clothing, and then electricity, housing, transportation, education, and investment and savings. We see here that actually those middle upper actually has this preference, has a preference to invest, and they allocate about 8% of their budget to saving. Again, this is a well-off families because this is a survey from conducted in 18 provinces, comprising of 4,200 respondents. So this is interesting because we can also conclude that Indonesians, especially the middle income group, allocate only 8% of their budget to investment and savings. Is it high? No, it is very low compared to our suggestions. As financial planner, we learned that we need to allocate 10 to 20% to saving for our future. But in reality, based on a survey, only 8% of us of our finances, of our budgets are allocated on investment and savings. So this is the reality of our customers, our clients, if you like. As financial advisors, I think we are facing a reality where people save very little. I mentioned earlier, Malaysians save a lot. So this is again why our pensions is challenging. Our future education is challenging. A lot of issues because we save very little. Now, based on this information, based on the survey, we also look at their preferences. Okay, 8%, they save 8%, but to what instruments? And based on the survey, we find that gold, interestingly, is the favorite of all generations. So below 20 years, 20 to 39, 40 to 60, and above 60, all prefer gold as their main investment instrument. Then comes reksadana is unit trust, sorry, it's still in bahasa, and then saham or shares, equities is also coming very strong. And then you have properties, which is very attractive or very lenient, very most preferred by those above 40. Property, of course, those Gen X prefer property to others, to sahams or reksadana. Sukuk is very little. The interest to bonds or sukuk is somewhat little. Perhaps more of understanding and literacy. So we see here the strong preference on gold, and then in capital markets, stocks and unit trust, as well as property. So we see these are kind of portfolio of Indonesian households in terms of investments. Again, this understanding is important, and we'll discuss later when we talk about investing. Now, this is the part where I think we need to discuss. We know the preferences on gold, and then in capital markets as well as property. The question is, right now, with the market is more friendly, the uncertainty is going away. Where to invest? This is for those who have not invested anything. Is it the right time to buy gold? The price of gold is very high. This is like the highest, it's very high at the moment. Is it still worthy of investing in gold at the moment? One question. So I would like all of you to participate. Please write in chats box. Is it still worthy? Is it still, is still advisable to invest or to buy gold today? Yes or no? All right, yes, right. And secondly, stocks. If those who are following stock markets will see that across the world, in advanced countries, the stocks prices have been rallied, especially with the cut rates. And the question still, is it still worthy? Is it not too high to invest today? Again, please put up your response in the chat room, chat box. Yeah. And finally, on property, this is, I think, more relevant to Indonesians. For those outside Indonesia, perhaps will have different situation. For Indonesia, property rates, the KPR and pembiayaan is especially the past year has been very restrictive for us to buy property because the rate is high. As far as for Indonesia, the down payment is still very high. The regulatory requirement is still high for us to borrow money, and that is perhaps also another burdens. That's for those who want to invest in property, those who have some funds to allocate in property. Again, the questions: is it the right time to begin investing in property, knowing that the down payment, the margins, the interest rate is still high, or despite the cut rates, or you will wait until next or next year or the following year? So again, these three questions. Let me just check. Okay, Tufel is considering investing in gold. Any other comments? All right. Now let me just put up perhaps through. Okay, Pak Dewantoro, investing in gold is still interesting in the uncertainty, right? The price will go up further. Yeah, I think I agree with this statement. Based on some of the analysis that I saw, the price of gold will continue to increase because the demand in many countries, especially China, India, is still high. They don't have, in China in particular, their property market has been experiencing troubles since 2 years ago. So instead of investing in property, now they channel their investment into safe havens, gold. So gold price will still increase, but at a lower rate. That is for sure. For next year, we will have to see, especially the geopolitics as well as how China is currently trying to implement policies to improve the property market as well as real sector. So if that will change the reallocations of assets in China and other markets, then there's a potential for gold to cool down a little bit. So yes, that's on gold. On stocks, is it still too high? The answer is not, because this is like composites. If you look at individual stock, there are still potential for stocks to increase at individual sectors as well as individual shares. I will show you. This is my experiment. So I'm not. It's not to show anything, but this is I have two SOTS accounts. This one is I applied, I think, like last month. Of basically this has not been a year, but again I just show you some of the. This is a real investment. I can clearly say that there are stocks that I bought, like invested 3 weeks ago or less than a month, has no increase their price or values above 5%. In fact, for Breeze, for instance, this is like if you look at I bought at 2580, now has increased to 3,100. So increase in value by 20%. Meaning to say that there are opportunities if you look carefully, if you understand the business, if we are consuming the products we are investing, companies where we invest. And also, I think a lot of people have said that has perhaps have proof that in every situations of the markets, there are goals to be found, basically. And then for property, again, the same rules apply. No, what is important for us to understand as financial advisors, to me, is understanding how we allocate our resources. Our time, when we look at investment opportunities, we study the annual report, we study the markets, we read the company's profile, prospectus. There's allocating times, right? And also allocating financial resources, where we put our money, where do we advise our clients to put their money, their wealth. So understanding where to invest and how we allocate, we balance, or we proportionally invest is the key, I think. So understanding asset allocation is key. And there are very many rules to allocate assets. You can first look at the risk tolerance. Of course, those conservative, you can advise them to allocate more on fixed income, like sukuk, or perhaps even fixed deposit. Of course, that's safe but very low returns. Once they move up from being conservative to moderate, or perhaps like, when you find people don't move up necessarily, but if you find other types of investors or clients who are more moderate or balanced, then you can increase the allocations on more risky asset class. So this is how we allocate assets based on their risk tolerance, risk profile of the customers, of the clients. The other one is based on age. Again, the younger the customers, the clients are, the more tolerance there are to risk, as well as they are willing to learn as well, and they are able to absorb risk necessarily. So, but as these clients age, they become much older, above 60 or 50, 60, then we balance out. We reduce risky asset more and allocate more on less risky assets, and also add cash to that pool. So this is the two models, two approaches, looking at risk profile as well as age. So this is something that, as advisors, we need to master, we need to understand, we need to learn how to allocate resources carefully. And then we add property to that mix. Then we need to know what our clients' risk profile are, what are their age, and also their financial goals basically. If their goals are mostly long terms, then we can advise on more risky types of assets, which will give more returns in the long run. So this is the key for us as financial advisors, I believe. So understanding asset allocation is something that we need to master. So in conclusions, I can perhaps put up some key takeaways. First, the fundamentals of the economy is much improved, and it will further improve as we enter quarter four, as well as we enter 2025 next year. But of course, geopolitics is still a concern. So we need to be more cautious in terms of our investment, especially those that are exposed to global markets risk. Yeah, and then secondly, disposable income in Indonesia is still limited. But of course, as we are as a country grow further, hopefully this will improve over the year. So currently, we learned that the middle class has reduced from 20 over millions to 17 something. Of course, this again, the middle class contribute a lot to investment, to stock markets, to capital markets, and that has been reduced. But there are, of course, other groups that can contribute, that compensate that loss. But again, if we look at the middle class, still struggling, but I believe that we will come back stronger next year, inshallah. And thirdly, family is the foundation. I think this is the key, and we are at Sakina Finance, and I think a lot of us subscribe to the belief that for personal finance to be strong and robust and sustainable, family interactions, family cohesions, as well as discussing finances in the family is key. So family is the foundation for everything, basically. And finally, I believe the investment is still the safe path to financial independence for many of us. But of course, we need to understand risk. We need to allocate resources, allocate assets wisely, and finally, of course, we need to donate and contribute to the society more generously. That will be open up more doors of risk, inshallah. Not risk, but risk, yeah, not bab risk, yeah, doors of risk, and that I think will take care of a lot of uncertainty in society. With that, I'll end my presentation. Thank you, Tufel, again, and thank you everyone for the opportunity to share my views. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Jazakallah khair, Dr. Lukian Tamani, for your wonderful presentation. Like based on the research, most households just allocate 8% for the saving or investment, and with the favorite instrument is a gold. Your example and case study made the complex topic of the investment easy to grasp. We are grateful to your time and expertise. But Mr. Lukian Tamani, I have one question for you. Perhaps I will. There is a paradigma in Gen Z, Gen Z generation, that houses are not for investment. In fact, they are annoyed with the previous generation, boomers or Gen X, who use house as an investment, because currently house price in Indonesia are unreasonable when compared to UMR or minimum wage. Yeah.
Okay, there are many ways actually to invest in property. Before I explain that point, we have to acknowledge house prices increase over times, right? Land is limited or fixed rather. So to disregard property investment as something not attractive, I think will be a loss to Gen Z. But yes, the barriers to entry is high because the property price is too high for a lot of people. We need to save a lot, tons of money even to pay down payment. But I think as the country develops, there are ways people can invest in property. There are instruments like REITs, Real Estate Investment Trust, or DIRE in Bahasa Indonesia, or we can invest through stocks that build properties. So again, don't neglect property investment, but perhaps you don't buy a house. You buy shares of housing estates. That's a better way to enjoy the profits, or to make your money work harder in the property markets, not directly, but through other means, to financial instruments. I think that's the way to go for me.
Okay, thank you, Mr. Rukian. Okay, before we next to the second speaker, let's take a picture and give your best smile, all participants. For the admin, perhaps can pin the all speaker. Okay. For admin, can pin all speaker, highlight or pin all speaker. Okay. Just one. Okay. Wait. There is Mr. Sahzan, pin Madam Ani, and Mr. Indra. Okay, let's take a picture. 1, 2, and 3. Okay, again. 1, 2, 3, and cheers. Okay, thank you. Okay, let's hear from our second speaker, Mr. Indra Prakoso, CFP, as Associate Director, Indonesia Financial Advisor Community, and also founder of Islamic Financial Planner Association, with the extensive experience in Islamic insurance. He will share valuable insight on comparative analysis of unit link and traditional insurance. Please welcome Mr. Indra Prakorso, CFP. Time is yours.
Thank you very much. Assalamualaikum warahmatullahi wabarakatuh. Thank you for the moderator, Mr. Tufail. Am I sound clear?
Yes, very clear.
Okay, thank you very much. Because I'm in a rural area, because I'm not in Jakarta right now. I'm right now in Bali. Okay then, thank you very much for the distinguished speakers and also from Madam Ani, who give me time, give me experience, and also give me chance to give presentation about the insurance, comparative analysis of unit-linked insurance and traditional insurance. We are going to discuss about the key differences and implications. Okay. Can I just, may I, sorry. Okay. This is about the introductions, about the unit links, and also compared to the traditional insurance. We have, there are two financial products, unit links and traditional insurance. This procedure aims to explore the key differences and the implications of choosing one over the other. Because nowadays in our community, there are several discussions about the unit links. They said that, oh, my insurance in unit link is getting deteriorating, getting lower. I get I already pay premium for this much of amount, but when I surrender my insurance, I only get this amount. It's very little. It's better for me. It's better for us to invest in some investment instruments rather than the insurance. Well, nowadays we have lots of problem of that, and that's why the OJK, the regulator of Indonesia Financial, uh, they said that we have to regulate the unit link. So we nowadays we call AD. Okay, so it means that understanding these differences is crucial for making informed financial decisions before they choose between do I need a traditional insurance or do I need a unit link insurance? Okay. First, we need to very clear understanding about the definition about the unit link insurance. Unit link insurance or unit link insurance plan, ULIP, we call PAYD in Indonesian term of produk asuransi yang dikaitkan dengan investasi, combines between insurance and investment. The policy, the policyholders pay premium that are partly allocated to life coverage and partly invested in various funds. This dual nature allows for potential growth in the policy's value depending on market performance. It means that uh, part of the premium we pay for the insurance based on the unit link is allocated to investment. So the main investment manager from the insurance company will growth will invest it our premium to to some of the instruments of the investment instruments, just like Brother Lukian, Dr. Lukian told us before. So it means that only a little of our premium comes for the coverage and divided to the premium for the investment. It means that we need to give a clear understanding to the community that if you are surrendered from the insurance that based on unit link, you cannot expect that it the same equal with the whole premium that you already pay. But it's for the short term. If the investment managers are good doing the business, doing the investing, uh, it's it's uh, it's possible for us. It's possible for us to give more than we already give from the insurance company because the investors for the investment managers is good doing their business. So now we go to the traditional insurance. Okay. About the traditional insurance provides a straightforward life cover without investment options. The premiums paid are used solely for risk coverage. So there's nothing to do with the investment. Ensuring beneficiaries receive a predetermined sum upon the insured death. This type offers security but lacks growth potential. Okay. So the whole premium that we already pay to the insurance company that we call it in Sharia is a contribution. The whole contribution to the insurance company is solely for the life cover. There's nothing to do with the investment. So it means that the customer of the traditional insurance have to pay the traditional insurance premium or contribution for the whole life actually, because the whole life is covered, so they have to pay for the premium for the contribution for the dana tabaru. Okay. It's the difference between the unit link and the traditional insurance. For the next. So the key difference, primary distinction lies in investment. Unit or payee offer potential market link returns, while traditional insurance guarantees a fixed sum. Additionally, ULIP or payee have a higher risk profile due to market fluctuations, whereas traditional insurance is more stable and predictable. Just like Dr. Lukian said that in investment, always there's a risk, but there is a potential growth. But in traditional insurance, there's no investment, so it's more stable and predictable. How much we already give the contributions, and we give the contribution to the Dana Tabaru, and that's for cover life. Okay, next. The cost structures. Cost structure vary significantly. Of course, ULIPs typically have higher fees due to investment management. They have to pay for investment managers, of course, while traditional insurance has lower administrative costs. Understanding these costs is essential for evaluating the overall value of each insurance type. So in unit link, that's why the OJK, the regulator of our banks, of our financial institution, need to regulate about the unit link. So it's very strict for the insurance officers and also for the insurance company to sell to over the unit link to the community, because we have to give a very clear understanding about the unit link, about what is unit link, uh, is there any risk, where you can spend, where you can put your money for the investment, or for the investment to investment instrument that is matched with your risk profile. Okay, so before someone buy a unit link insurance, we have to do a financial checkup. First, we have to do a financial checkup, and also we have to check their profile risk. So, in this case, it will minimize the risk of dispute between the customers and the insurance company. Okay. Flexibility and customizations. Of course, the unit link provides greater flexibility in terms of investment choices and premium payments. Yeah, because in just what I said before, in one premium or one contribution is will be divided into two. First, for to cover the risk of life, and we call it as the cost of insurance, and the other is for the investments. And the customer has ability to choose what investments instruments that fit with their risk profile. It, we call it as a flexibility to choose the investment instruments. But in our community, uh, very lack of education about the instruments of investments. They just put their money, just hearing from others, from their relatives, and even from the YouTuber, okay, from the we just know that, oh, okay, uh, the one that I know, he invests the money to this kind of instruments investments. So I just follow them without any education about, without any knowledge about the investments. So that's the very big homework for all of us. In contrast, traditional insurance usually offers fixed terms and conditions, making unit link more adaptable to changing financial goals and market conditions. It means that if we choose the traditional insurance, which is insurance is a protection, it's not an investment company, but basically insurance is a protection, not investment. It's not an investment company. So it's very good for us to put our risk, sharing our risk with the whole members of the insurance in Sharia. But in conventional, of course, we just transfer our risk to the company. Okay, so that's a very big difference between traditional insurance and the unit link. First, it's about the cost of insurance, but there's a part of investment in unit link, but not in traditional. And the third is the flexibility in the customization. When the customer would like to uh, would like to uh, have a fine tuning with their incomes in the next incomes from a for the traditional insurance, we cannot change the premium or contribution per month or per year. But in unit link, we can change it because there is a instrument, there's an investment in the whole premium. Okay. So the conclusion, in summary, both of unit link insurance and traditional insurance have unique advantages and disadvantages. The choice depends on individual financial goals, risk tolerance, and the need for flexibility. So when we go to the customer or go to the community, we need to educate their first whether they need whether they fact, match with fit with the in traditional insurance or they fit with the unit link insurance. We need to check their financial checkup. We need to do the financial checkup and we need to check their risk profile. If the customer, after we check the risk profile, they're in groups of moderate investors, so we can suggest them to put their investment to an instrument that give a moderate risk, and vice versa. If they are in a group of we call it conservative investors, so we invest conservative risk profile, so we can suggest them to put their investment to investments in a we consider as conservative, like we can call it like gold or like deposits in a bank, and etc. Well, distinguished speakers, Mr. Tufail, Madam Ani, and all, that's all my presentations. Thank you.
Thank you, Jazakallah khairan, Mr. Indra Prakoso, for the insightful presentation. Your example and case study made a complex topic in Islamic insurance to easy. We are grateful for your time and expertise. Okay, and now it's my pleasure to introduce our final speaker for today, Dr. Sahizan Noh, IFP, as a head of Wealth Management Technical Committee at the Malaysian Association of Tech Accountants and also International Relation of Islamic Financial Planner Association. Dr. Sahizan Noh will be sharing insight on a summary of investment and insurance and Faraid. Please join me in giving a warm welcome for Dr. Sahizan.
Assalamualaikum. Thank you, moderator. How are you, everyone? Is my voice clear so far, moderator?
Yeah, clear.
Okay. Again, thank you to IFPA for this very good seminar session. So also my regards to all other speakers. So let's focus on the topic. I will be covering the topic in correlation between insurance and investment with Islamic inheritance. But before that, I would like to share the distribution dilemma, whether in Malaysia and also Indonesia, whereby we can see that in Malaysia alone, based on the reports, numerous reports that we have published, so the unclaimed assets of frozen assets has reached almost 100 billions. All right. So the non-administered estates can be categorized into two categories, whether movable or immovable. So, but however, unclaimed monies in Malaysia will not considered as frozen assets. So hence, the 90 billions or 100 billions unclaimed or frozen assets excluding unclaimed monies. For Indonesia, what we have learned, there are phenomena known as tanah warisan or unclaimed land. A lot of land has remained administered and not been claimed by the heirs after the demise of the owners. Other than that, there are significant absence of will within the legal heirs. There are some confusion between the inheritance laws in Indonesia. So whether we have to follow perdata or follow Islamic laws, all right? So there are also issues on inability of the legal heirs in managing the estate of the deceased people. If we go further, before we move straight to the Faraid issue, let us understand first the pillars in Islamic wealth management. Basically, there are 5 pillars in Islamic wealth management. Start with wealth generation, wealth protection, wealth accumulation, purification. In our context today, more on wealth distribution. There's no such wealth creation as been practiced in conventional wealth management in pillar number 1, because according to Islam, all bounty of wealth on this world is belongs to Allah subhanahu wa ta'ala, and the Muslims ourselves is just merely a trustee, vicegerent or the caliph to administer all the bounty on this world. In terms of the components, so when we talk about wealth generation, we always talk about cash flow, liability management. So definitely we know about cash flow statement, net worth statement. When we move to wealth protection, definitely we involve risk management analysis. In Indonesia, don't have takaful. We have asuransi syariah, but it's not about products alone, right? Our focus on the advisory part, how to manage the gaps, if any, based on different methods, whether rule of thumb methods, capital liquidation methods, it depends, right? We move further to the pillar number 3, which is wealth accumulation. There are lots of investment instruments currently being offered by the providers. Not only how much return that we manage to earn or gain from our investment, but somehow rather how is there any relevant or any suitable Sharia compliant investment right for Muslims to subscribe or to invest. We move further to the next pillars, which is wealth purification. Unlike conventional, we only have taxation. No doubt, we have different tax regime. Malaysia and Indonesia, for example, have different tax bracket. Okay, however, in terms of Islamic wealth management, our focus definitely is on zakat management. We don't have zakat planning because that when we relate to zakat, it's more towards how to manage our zakat, how to ensure that we pay our zakat accordingly, we fulfill our zakat obligation. Okay, some practitioners have additional pillar called wealth preservation. This relate to retirement, pension or pension. All right, so but we can see there are a lot of hybrid products which relate to takaful or relates to insurance and investment, also have embedded retirement element as well. We move further to the last pillar called legacy planning. So here we have to ensure whether we manage to plan during lifetime and or we really leave everything, all the our estates upon our death to the Faraid or according to Islamic inheritance law. There are some differences that we may need to understand first between Islamic and conventional wealth management. Number 1 is Islamic wealth management focus on the Muslim need to achieve al-falah. What is al-falah all about? Al-falah is to be successful not only in this world but also in the hereafter. That's the ultimate objective in the Islamic wealth management, whereby in conventional wealth management we don't focus on al-falah. It depends. As long as we can earn more income, more money, is good enough in conventional wealth management, whereby uh, we don't tolerate we tolerate uh, uh, when things that prohibits in Islam, the likes of riba, maisir, and gara. We move further to the next difference is the Sharia compliant methods. We focus, we emphasize that all products or solution must be Sharia compliance. Otherwise, we have to pathway. We cannot continue in investing Sharia non-compliant, for example. We have to stop our insurance coverage, for example, if it's not Sharia compliant. And according to Islamic wealth management or financial planning, the planning is beyond this world, all right? So infinite horizon of financial planning. So whatever that we plan, perhaps it can also benefited after our death. Why we need to have legacy planning? Number one, if we want is to avoid our asset from being frozen. So we must to ensure that if we die yesterday, our family members that we left in this world can sustain. The issue is now how fast they can get all the estate. So that's why we need to plan during our lifetime, all right? Or otherwise we leave everything to the Faraid. Number two is there any plan that we may need to consider for the loved ones, all right? Or to ourselves, okay? Because yes, we perhaps we very hardworking during our lifetime. So we may need to have something to plan something for the charitable purposes after our death. Number three, to fasten the process of estate administration, be in Malaysia or Indonesia, depends. We have different types of processes, administration in terms of the regulators also. But definitely with the plan, it can fasten the process. Definitely number four, to avoid the conflict and misunderstanding between the family members, right? Between the siblings, between the father and mother, between the spouse and other, and perhaps with the kids as well, the children's. If we move further, with the legacy planning, we can also avoid leaving our heirs in poverty. This relate to the point number one. If we die yesterday, so if our heirs can sustain their life, right, how fast they can get all the estate that belongs and by right belongs to them. So other than that, we can do something, bequest something to non-heirs. For example, for charity, for example, and it has to be compliant to the Sharia law. Before our estate be distributed according to Faraid, we must understand it's not as easy as we think, because there are few steps, process that we need to observe first. Number one, the settlement of funeral expenses. It must be settled first, then only we move to the second step, settlement of debts. Do we have any debts left before we die? If yes, that means it has to be settled within the amount of estate that we leave behind. So is there any uh, uh, settlement or declaration of matrimonial assets between the spouse? If the husband die, we have to check with the wife whether she wants to claim matrimonial asset or not. So do with the husband if the wife dies, right? If that we have to settle it first, then only we move to the next stage or process, wasiyah or wasiyat or Islamic will. Is there any will been written during lifetime? If yes, so we have to check, we have to observe whether it's within the requirement of Islamic will, whether the amount is more than 1/3 or below 1/3. Is the recipients within the legal heirs or non-legal heirs, right? So everything have to be observed, assuming that process number 1, 2, 3, and 4 been settled, then only the estate will be distributed according to the Faraid. What is Faraid? Faraid is the inheritance law specifically prescribed, discussed in Al-Quran, in Surah An-Nisa. There are 3 main verses discuss about Faraid, verse 11, 12, and 176, if I'm not mistaken. So there's prescribed portions entitlement for legal heirs being discussed clearly in the Quran, right? So this system is devised definitely by Allah Subhanahu wa Taala, and all Muslim must not circumvent the system. Whatever the plan that we do during lifetime is not meant to circumvent Faraid. Just a matter of to make sure that we have a good distribution in terms of to make sure that we do some charity, we safeguard some of the family members, okay, and to make sure that the flow, right, smooth sailing after our death. So we can see that based on the Surah An-Nisa, so all these illustration we discuss clearly, right? If the deceased is the husband, what would be the percentage or portion for the wife? So you also discuss the portion if the deceased have children or no children. So what about the parents of the deceased? What about the children as well? We can see here, right? So this can be learned, all right? I don't think that today's forum sufficient for us to calculate, all right? But perhaps we can have one session later on. Perhaps IFPA can arrange some discussion session on how to compute or calculate based on certain scenarios. All right, in Quran also, the classification of S has been discussed clearly. So we can see the most left category, Ashabul Furud, are the legal heirs mentioned in the Quran. So all these number 1 to number 12 portion of each category been fixed, all right? However, if there's leftover, all right, there's some residue of the estate, so then only move to the second category of the S called asoba. And the asoba also we have 3 different types of category. You have to be observed category by a category. Let's assume they still have leftover, they still have residue, then only the remaining of the estate will be passed over or distributed to by Tunmal as Zawil Arham category of S. There are some misconception towards Faraid. Number 1, Faraid is only for the wealthy, which is not. It's applied to all Muslim, be wealthy or not that wealthy, okay? Whether we have small estates or large estate, depends. And Faraid law applies solely to Muslim for certain country, which is also incorrect because it's applied to all Muslim, regardless where are you residing. In Indonesia, in Malaysia, and the law is fixed. We only have one law, must be observed and applied to all Muslim. Whether the Faraid law is unjust to women or not, we have to understand the why. Every male legal heirs getting more compared to the female legal heirs. We have to understand the value behind that. Why Quran specifically mention certain portion for the male and the female heirs, right? So if the female, for example, if the female, the wife get 1/4, for example, portion from the total estate. So the 1/4 is 100% belong to the wife. However, if the husband receive 1/2 from the estate, if the wife dies, so the husband have to also safeguard other family members from the 1/2 or the half portion that he received from the estate. That's the value that we need to understand. It's not about unjust to certain gender only when we talk about Faraid. So other than that, there are some comments concerned that Faraid law may needs to be updated and have to be relevant in modern time, which is irrelevant and all, because this is a divine law rules by Allah Subhanahu wa Taala in the Quran some more. All right, so it has to be definitely uh, 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 it's holistic or comprehensive enough, so it can be used towards the end of the world, even until Qiyamah. Okay, so allocation of equal share is not allowed under Faraid. The specific portion has been discussed and allocated according to the Faraid in Quran.
I
However,
use Indonesian bahasa.
Okay, sorry.
however, we have different doctrine that we can apply. Okay, so whether we can discuss within the legal S, if they all agree that the estate can be distributed fairly among the legal S, it can be done. All right, is the Faraid is not rigid. Okay, is there a main reference for all legal S? Okay, Faraid is the only way of distributing Muslim estate in terms of the law. That's the only law that we have to observe. But we in Islam, again, is a universal. That is why we have other components that we can consider during lifetime to plan our legacy before our death or before we die. When relate to the implication of Sharia non-compliant investment insurance towards Faraid, we have to understand the repercussion, all right, the impact in terms of the value of the estate for the Muslim. If the deceased have invested in Sharia non-compliant, has subscribed to conventional insurance. Let's move to the number one first on the investment part. I think that according to Sheikh Yusuf Al-Qaradawi in his kitab Fatwa Mu'asirah, has decided that anything related to tainted or non-halal gains from investment is considered haram. Okay, and the value of investment, although not Sharia compliant, is still part of the inheritance of the deceased individual. However, is now down to or up to the legal as whether they want to accept it, take it as halal, or they will redistribute back the part of the tainted income in the estate to the charity. All right. So for the insurance, here we are referring to Sharia non-compliant insurance or conventional insurance. Okay. Conventional insurance does not comply with Sharia at all. All right, because it mingle with riba, maisir, and garar, and all elements that conflict with the principle of Islam. Hence, only the principal payment of the insurance, if any, will be part of the deceased inheritance. Whatever gain, earning, or what profit, interest received from the insurance policy will not be part of the Faraid. This is based on Malaysia practice. Okay, so normally we will advise the legal as here, Mr. and Mrs. Based on our checking, few of the estate here mingle with Sharia non-compliant. It's mixed. Okay, mixed estate. Right. So we advise them so how to relinquish, how to purify some part of it. Okay, but it's up to the legal eyes. It's not mandatory, but it's our role as financial advisor or financial planner to advise the legal eyes. The category of the estate, if we have mix from conventional and Islamic. I think should be all from me in terms of in relation to the implication of investment and insurance which are non-compliant towards Faraid. So I open for any question, if any. Thank you, moderator. Thank you.
Okay, Jazakumullah khairan, Dr. Sahizan Mal. Your presentation on Islamic wealth distribution and Faraid was truly enlightening. Your practical example in real world application made the topic very relatable, like distribution dilemma Faraid in Indonesia versus Malaysia and misconception toward Faraid. Mashallah. And I want to express appreciation to all our speaker today for sharing the valuable knowledge with us. Your combined expertise has given us to deeper understanding of the importance for Islamic finance in our lives. Okay, we covered a lot of ground today, and I'm sure you all have a question. Let's open the floor for a Q&A session. Please feel free to ask your question in the chat room, or you can raise hand to ask verbally. Okay, there is one question from Mr. Dewan Toro Marsono. The first to Mr. Lukian. Saving for the future spending. Nowadays, information technology make uncertainty certain. Big impact on investment, full of risk investment decision in a matter of second become irrelevant. What should investor do? What kind of investment combination are resilient to uncertainty in the medium term?
Yeah, this is a tough one. So Dr. Shah, perhaps, and also Brother Indra could chime in as well. I think with the advancement of technology, especially investment space, investors or us as advisors need to be, I think, to have principles. That's the key, I think. Meaning we need to stick to basic principles of all investors should understand the risks and the goals. If we know where we are going, what sort of financial goals that we have in place, and well, basically investment is an avenue or the way to reach our goals, if you like. So I think having a principles is key, and to me the basic principle is that we need to diversify. Of course, everyone knows that. So diversification is key, but in that diversification portfolio, your baskets of investment, I think we need to have at least some strong asset class that will kind of lift the recessions, will be will be unaffected by the vulnerabilities or for instance property. You need to have some sort of property investment in your portfolio. That's one. But to me, I think the question is how much, how large is the property assets in your portfolio? Is it 40 max or 35 or 50? Certainly not above 50%. So I think we need to me, I would like to keep it 1/3. So I like the rules of 1/3, maximum of 1/3, 33%, for instance. And then you need to have also solid assets, but also somewhat liquid, which is gold. That's again the range of 30 to 33%. So again, maximum 1/3. And then the rest you can go for types of risky asset but higher returns. So in my own portfolio, for instance, I basically have property, and then goals is of course belongs to the wife, so I don't necessarily have goals, but stocks. That's what I maintain. So property goals or basically even silver is attractive at the moment, although we don't really necessarily keep silver as much as we keep goals and stocks. I like stocks so much, and in fact, I think there are a lot of opportunities in investing in real companies, in the products that you love. The rest I don't really venture into, like cryptos. I don't understand cryptos. I don't understand. I do have sukuk, but very little. So to have principles is key to me. And then the diversify properly and then to rebalance when necessary. Again, the use of technology is important. We need to keep up. Basically, I think finally I would like to add, to keep up with all the advancements, we need to understand the technology behind it, like the you know, the stocks, the stock prices are influenced by people, the speed of people investing, speed of people accessing information. So of course that will influence the market. So we need to understand those dynamics personally. Thank you.
Thank you, Mr.
Dr. Shah, if you have anything.
Okay, let's next to another question to Mr. Indra Prakoso. The unit link and the choice of investment. When should investor choose unit link rather than mutual funds?
Okay, thank you to Mr. Dewantoro for the questions. Let's discuss about how a customer choose the best for them between the unit link and the choice of mutual funds. Okay, or in this case, we discuss about the traditional insurance. Well, it depends on their financial goals, and also it depends on their financial depends on the result of the financial checkup. If the customers has a very limited fund for the limited time to invest and also to buy a unit link, so it means that they should choose the unit link because we have a terms let's see, if the source of income is from the salary and there's a pension and there's a limited time to get the salary, so he needs to choose the unit link, because in unit link, after several times of contributing the premium, so they can have he can waive the premium. The cost of insurance will be paid from the investments, but in traditional insurance, the customers need to pay the whole life, as long as they would like to be protected by the insurance company or by the members of the customers. So it depends on the financial goals and also depends on the source of income. But of course, in traditional, the cost or the amount of the premium or the contribution is very little rather than the unit link. Why? Because in unit link, there's part of the money or the premium should be go to the investment. That's why it's not only the cost of insurance they have to pay, but also they have to spend much money for the investments. That's it. Thank
Okay,
you.
thank you, Mr. Indra Prakoso, for your answer. And then next question for Mr. Shah. How to divide inheritance of an unmarried person? Okay, this first question, and the second for those who are married, if they leave most of it to wakaf, is this a wise suggestion?
Okay, I have two questions. All right, question number one. So B, whether you are married person or unmarried is still subject to Faraid. All right. So, but it depends. So if you still leave behind your parents, that means your parents will entitle some part of it. If you still you have siblings left behind after your death, all right. So your sibling also entitle some part of it. If you have nobody, no siblings at all, no parents at all, so everything will be distributed to the Baitul Mal. All right. Okay, that is why this relate to the second question. All right, be married or unmarried, whether can we leave everything to wakaf or waqf during lifetime? It depends. Okay, if you are a married person, you have to make sure your spouse, your children, your family members has something to rely on, right, after your death. If and wakaf also not for other people's, you can create wakaf for the family. So that's why we have family wakaf, isn't it, Pak Lukman, Pak Idra? Yeah. So we have family wakaf, wakaf khairi, all right. So wakaf zuri. So it depends. Okay. If you decided to make it everything as wakaf for your family, all right, let it be. Okay. But however, we always advise, right, our Muslim friends out there to ensure that there's clear demarcation between the charity and for the legal heirs. We don't please make sure that we don't eliminate the rights of the family members, the rights of the legal heirs, right? So whatever we want to, good deeds that we want to do, we have to observe that we have to make sure that our family members have to be in a good condition, all right, can be sustained first, then only we can think about other people.
Okay, thank you for the answer, Dr. Shah. Okay, next question to you again,
Okay.
from Miss Rina Bahrain.
Mhm.
Introduce me. I'm a lecturer who teach about Mawaris or Faraid. The current challenge for all of us regarding the implementation of Faraid in inheritance matters in Muslim family. Is there a thicker distribution of traditional inheritance? The question: what is our responsibility as someone who has been given a little knowledge about Faraid to be able to ensure that Islamic law regarding inheritance in Islam still exists and can be implemented?
Number one is the knowledge. All right. So we have the knowledge. We have to transfer the knowledge. All right. So the financial literacy, the literacy about the importance of implementing Islamic inheritance law would be the first step. Okay. We are not the implementer. We are not the regulator. So perhaps we are in Indonesia. So we have at least 2 or 3 types of different regulations, right? But the thing is now, if we can at least share the knowledge, transfer the knowledge to our Muslim friends out there, the importance of the Islamic inheritance law, why we have to, there's no option actually. Why we try our best to not circumvent Islamic inheritance law. I think it's good enough. The implementation part is down to us, right? Whether they want to accept our advice, whether they want to proceed as per our advice is up to the individual. But still, since we have the knowledge, be little or what specialists in that in this area, the most important part is to make known the knowledge to other people. All right. If they ask for our assistance, then we can guide them at our best. So it depends because again, in Malaysia, although Malaysia is smaller compared to Indonesia, we have a lot of issues as well. And so definitely Indonesia have more challenging issues and challenges. Okay, so when especially when involve um, what sophisticated components in relates to the legacy planning or inheritance planning.
Okay, thank you for the answer, Mr. Shah. And the next question from Denny Murdani to Mr. Indra Prakoso. Let me introduce myself. I am a doctoral student. I'm currently completing my dissertation. I want to research the implementation of Sharia finance and its impact on strengthening and developing the regional economy. Can I communicate with Islamic Financial Planner Association to discuss? Please advise. Thank you.
Okay, thank you, Mr. Denny Murdani. To do answers about the financial
Hello, Mr. Indra.
Hello. Okay.
Yeah.
Okay. Can you hear me?
Yes, but your video
Thank you.
freeze.
Okay. Okay. Is it okay now?
Yeah. Okay. Clear.
Okay. Okay. Thank you. Thank you so much, Mr. Denny Murdani, for your just research about the implementation of Sharia finance and related to the regional economy. Of course, we are IFPA are welcome to all the stakeholders to come with us, to go to us, and to discuss about the Islamic economics, about the Islamic finance. So we can discuss and we can contact the chairman, Madam Ani, and then Madam Ani will guide you to who you can do the discussions. That's all. Thank you.
Okay. Thank you. Thank you. Okay. Next question from Ilham Winonto. Thank you very much for the very insightful presentation. From all the speaker, I would like to ask the following. The first to Dr. Shah again. Are there any simple tips or planning wealth and wasiah distribution early on so that it doesn't become a burden when we pass away?
Okay, thank you for the question. Number one, make sure that you know your list of assets, list of liabilities, and the most important part is you know all your family members. All right. Okay. So all these things is very important for us to write a good wasiat. Okay. Or otherwise, we cannot confirm our asset. What the total value of our assets. Is there any liability within our responsibility? So I believe that it will impact the distribution after our if after our death, definitely. That's number one. Okay, that means list out your assets, liabilities, and your family members. Number two, perhaps don't invest in Sharia, non-compliant investment, or etc. Right? So because it will impact in terms of the value, okay, of our estate later on. Because if our legal aids very concerns about Sharia non-compliance estate, so definitely they will not accept at all. All right. So manage our investment. Start with asuransi syariah now. I believe Indonesia have a wider solutions and products compared to Malaysia. All right. And then that's number two. And number three, plan now. Don't wait until reach 50 years old, 60 years old. All right. Because some of us do feel that even I'm 50 or 60, I'm still young. Oh, that's very dangerous. All right. So we have to start now, if not yesterday. All right. So should be today. Thank you.
Thank you, Dr. Shah, for your answer. And then the next question to Mr. Tamani, Lukian Tamani. So far related to macroeconomics, we have always used the capitalist system as the market reference. How do we respond to this from an Islamic financial planner perspective when explaining to the public or customer?
Thank you, Pak Ilham. I think this is very relevant questions. I think we need to ask these questions often, not only to explain to the public, but also to ourselves. I think how can we use as a benchmark? How can we use this benchmark properly, not excessively? I think those are the questions that I think we need to constantly ask ourselves. I think to answer your questions, the context I think is important in investment as well as in money management or financial management. We live in a context where the dominant values, the dominant system is that of capitalism, and we are measured or we are influenced heavily by those instruments in the system. So notwithstanding, I mean, our efforts to try to establish our own measure systems, we are still currently, we can't deny that we are in the system that use interest benchmark, that use Ribawi related instruments as benchmarks. So I think that's the explanation. I think we as long as we are a small part in the system, we will be, I think, not for we will be for the long time, be influenced by those indicators. But I think the most important thing in this situation is to continue to develop our own indicators. I believe few scholars or some scholars and some government institutions, educational establishments are considering some benchmark, including, for instance, I understand that there are some of our colleagues in Indonesia who are developing a real sector benchmark using real sector developments. So the benchmark, the price, the benchmark based on the returns on real sector, which is very interesting basically. So once we have this this alternative benchmark adopted by majority of financial institutions or companies, I think it will be interesting to see how this alternative benchmark perform vis-a-vis the existing benchmark, i.e. capitalist benchmark. So I think to me, I see this as a challenge. We are, of course, we need to be realistic. Yes, as long as we are within the system, we use this as a benchmark. How can we navigate this system well, without, of course, forgetting our own mission to have our own 100% benchmark. I think Islamic economic system is still small, but slowly I think we make progress. I believe we may have made such huge progress, especially in the financial sector space. So financial sector, Islamic financial sector is like, if not half, but in some countries are already a quarter of the conventional financial system. So hopefully this will be much higher in the future. We will be forever optimistic, inshallah.
Yes, mashallah, mashallah. Thank you for your explanation, Mr. Lukian. And then to the next question to Mr. Prakoso, related to the development of Sharia unit-linked insurance in Indonesia. Could you please provide an overview of the proportion of dominant investment fund distribution in what types of Sharia investment product? Would it compete with conventional investment product?
Okay, thank you for the questions. Well, actually, we have a lot of instruments for the Sharia investment products, but as not as much with the conventional one. We still have limited products. In a portion, we in Sharia, actually in unit-linked Sharia, we a lot have investment to a capital fund. Okay, but for the conventional, we have much more alternative to put money to the investment instruments. So if you ask about could it compete with conventional investment products, uh, regardless, I have to say that we still cannot compete because because like when we are going to put our money to the saham stocks in a banks, we only in Indonesia we only have one bank, Sharia banks, which already listed in the market, but we have lots of conventional banks which are already listed in the market. So regarding we have to say that it's not complete yet. But we need more customers to invest so we can compete in the near future. Thank you.
Okay, thank you, Mr. Indra, for your answer. And then there is one question from Mr. Dewantoro Marsono to all presenters. Is investment in Bitcoin and so in the short term is allowed? Perhaps Mr. Lukian for the first answer.
This is a bit contentious. I think some scholars um, endorse investment in these types of instruments only as asset or as asset class, yeah, not as money or token. So that's one part of the argument. So there's a group of scholars who I think approve investment in this asset class or but there are also many scholars, I think, who still consider this as not uh, um, not halal. So in any kinds of use, either as money, as a currency, so not as currency or as asset class. Personally, um, I think I take the position of the second opinion, basically. So to me, Bitcoin, I don't understand Bitcoin or cryptocurrency, so I will stay away from this.
Okay, okay. There is any additional answer from Dr. Shah or Dr. Indra?
I believe we will not discuss about the different opinions on whether we can invest in current cryptocurrency or not. But if you ask my personal view, if we can invest in a cryptocurrency and take it as part of the investment. All right. But my personal experience with my client, I don't advise my client to invest in cryptocurrency due to the risk issues, due to the a lot of issues actually. I believe Pak Lukman and Pak Indra also agree with me. Right. So we have a lot of alternative tools or instruments that we can consider if we want to earn more income. All right. So if we are a risk taker, why don't you go for the shares like Pak Luman said? All right. Okay. All right. That's my answer.
Okay, thank you, Dr. Shah. Mr. Indra, do you have any additional answer?
No, I don't think so because all those two speakers are very, yeah, they're in their field, not in my field.
Okay, okay.
Okay.
Okay, Alhamdulillah, we had a wonderful discussion today, and I'd like to thank you for everyone for the insightful question and comment. Before we wrap up, let's hear some parting words from our esteemed panelists. Dr. Lukian, would you like a start of us about closing remarks, followed by Mr. Prakoso and then Dr. Shah. Please keep your closing remark 3 or 5 minutes.
Okay, it has been very interesting and engaging sessions, webinar, I believe, and I learned a great deal from all the speakers or the members of the panels, as well as from those who asked some questions just now. But in the end, as a community of financial advisors, as well as those who are concerned with Islamic finance at large, we need to continue, I think, to constantly find the right way, the right space for us to be in the economy, in the whole financial system. I think how to differentiate ourselves as Islamic financial advisors with other advisory bodies or advisory associations. How to differentiate ourselves as practitioners vis-a-vis other professional practices, and to find the uniqueness of our professions, our products, our system is key. I think not just for some parts of the community, not just for the scholars, but for us also. I think to find the uniqueness, to establish, to develop our unique value propositions. I think, and as a community Islamic financial advisors like us have, I think, a responsibility. We have a communal collective responsibility to educate public. That's for sure, because a majority of people still not aware of Islamic finance, not let alone of investing in stocks or other instruments. And also we need to advocate to other stakeholders, our other organizations, to go hand in hand to develop, I think, a robust financial system, a robust products, a robust professional body that will be benefit to everyone. I think. So education is key. Advocacy is also important. I think finally the most important part, I think, in this endeavor is to collaborate. I think we are at IFPA have that spirit to collaborate across certification bodies, across companies, across countries, even. So hopefully with these collaborations, with the same mission, we'll be able to hopefully improve the well-being of our clients, our stakeholders, our customers, inshallah. With that, I thank you IFPA for inviting me, and I hope everyone all the best, inshallah. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Mr. Lukian, for the closing remarks. And then next to Mr. Indra Prakoso.
Thank you very much, Mr.
Sorry, Mr. Indra, your sound is
Is it okay now?
still delay.
Oh, sorry. Is that okay?
Okay, okay, better.
Please. Okay, thank you very much. Okay, I repeat again. Thank you very much to the Mr. Kufail for a very good moderator for today. And also thank you for Dr. Shah and Dr. Nikian, and also to the FPA for letting me to be one of the panels. I'm very feel honored. Well, actually, we are, as a financial planners, Islamic financial planners should have we have we need to contribute our knowledge to the community. We need to educate the community. We need to give a very best of us to the community. So when we go to the customer, please educate them first. What should they have? The amount and the type of the insurance, whether it's a unit link or whether it's a traditional insurance. Because insurance is not a business with only 1-2 years. It's a business for the whole life, and also it's a business for the hereafter. Just like the Shah said, it's related with Faraid. If, moreover, if the benefits of the unit link or the traditional insurance are given to the community, back to the community as a wakaf. So that means that we need to very careful before we suggest our customers to have whether it's a unit link or a traditional insurance. That's all. Thank you.
Okay, thank you, Mr. Indra. And the last, Dr. Shah, for
Thank
the
you.
remarks.
Thank you, Pak. I believe today's seminar is a good platform, especially when we have Pak Indra, Pak Lukian as part of the panelists. So they have our wide experience. All right. So Number one is our responsibility and accountability to make sure that our Muslim brothers and sisters know about the importance of implementing Islamic wealth management. All right, that's the most important thing. Then only we can move further how we want to assist them in ensuring the investment is in ambit of Sharia. All right, we don't involve in insurancy at all, except for insurancy Sharia, and how we want to ensure also our estate can be distributed according to Islamic rules and or Faraid. So we can consider a follow-up session after this if we do think that it's a benefit our participants. All right. So again, I thank you to not only to the organizer, also to my fellow panelists, and not to forget our participants. Thank you.
Okay, thank you. Information for our attendance. Please fill your attendance to get your e-certificate. The link will be in the comment channel. Okay, thank you all for your active participation today. It's very insightful webinar. Your presence has made this session truly valuable. As your moderator, it's been a pleasure guiding this discussion. Thank you for your participation. This concludes our webinar for today. And let's close with Tifratul Majelis Doa. Subhanakallah wa bihamdika, asyhadu an la ilaha illa anta, astaghfiruka wa atubu ilaik. Jazakallahu khairan. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you so much.
Thank you. Terima
Pleasure.
kasih.
Thank you.
Jazakallah. Hatur nuhun.
Yeah, jazakallah.
Bisa terus masalah.
Assalamualaikum.
Waalaikumsalam.
Waalaikumsalam.
Thank you so much.